No let up in sight for the euro, with the sovereign debt crisis expected to weigh on the single currency all year. That is the main finding of Reuters' latest FX poll. The survey also sees the strongest year-end forecast for the yen in more than a decade, and sterling expected to tread water throughout 2012, despite a brighter outlook for the UK economy. For more now, one of our poll participants, Tom Levison, currency strategist, ING Financial Markets. Hi there, Tom. 120 in 6 months is what you're saying for euro dollar against 127. The median. Why are you so bearish?
I just think that FX markets in 2012 are going to be all about the Eurozone debt crisis, the extent to which the credit crunch within the Eurozone weighs on global growth will be a key factor in how FX markets perform. And I think, yes, the speculative market is exceptionally short euros already, in fact to a record degree. Our expectation is that during the first half of this year, there'll be new investor communities looking to sell the euro, whether that be corporates, institutions or foreign exchange reserve managers. So we think those communities will be selling the euro. And we think no matter whether policymakers solve the debt crisis in the first half of this year, the euro does really require weaker levels. I think monetary conditions need to be weaker in the Eurozone, and that can be delivered through a weaker euro or even quantitative easing from the ECB.
All right, there are those, of course, who argue tighter conditions, higher bond yields, that the deeper the crisis goes, actually the more likely it is this euro is going to go up.
I think we would disagree with that. I mean, I think the history that we've seen over the last few months and quarters is that policymakers and politicians, and this is a key point, you've got politicians leading events in the Eurozone right now, which is not a comfortable situation for markets. Just given the time frame and the timetable of events in the first quarter, the first half of this year, of course French elections in May, it's almost impossible, I think, to see that Eurozone politicians will get ahead of the problem and provide a convincing solution that really satisfies the market. And I think markets do overshoot, and I think 120, in our view, is at least a sensible target for investors to be looking for. All
right, you're a bit more bullish on the yen as well. Clearly you're buying into the risk-off safety trade. Too bullish?
Too bullish? I don't think so. I mean, I do think towards year-end, maybe into year-end, there'll be some shoots of recovery and maybe risk assets will perform a little bit better. But we do believe that the first half of this year will be a very challenging risk environment. And on that basis, yes, we think dollar-yen can stay close to its lows, maybe trade down towards 75. But the risk is that you get sudden bounce of dramatic intervention from the Ministry of Finance in Japan, and that will push dollar-yen far higher, significantly higher without any notice. But beyond that, we do expect dollar-yen to be generally trading lower.
All right, and I want to get your take just to finish up with on cable. Pretty much broadly in line with the median is ING, but 156.5 12 months from now is a little bit above. Actually, no, you're going for 163. Sorry, I should say. I mean, that's pretty bullish as well.
Yeah, I would agree with that, and I think the risk is, to our view, that cable trades below our forecast. We expect euro sterling to fall to around 80 by the middle of this year, and combined with our euro dollar view of 120, that sees cable down to 150 or so. And I think the risk is that, yes, cable stays softer than our forecast for it to rise back above 160 over a 12-month horizon.
Are markets going to be calmed by what they're going to hear from Osborne over the next few months, do you think?
I don't know. I think the UK is treading a very fine line. Of course, the UK economy is highly linked to the Eurozone economy, so to the extent to which the Eurozone suffers a recession, the UK will be dragged down as well. But what the UK has in its favour is that the ratings agencies are satisfied with its AAA rating, and also they have a proactive independent central bank that can do what is required, whether that's quantitative easing or not. So I think markets will reward the UK and sterling for that situation, but of course the UK has to avoid recession. If it doesn't avoid recession, then maybe all bets are off and sterling is weaker than we forecast. All
right, Tom, thanks a lot. Tom Levison, ING Financial Markets. Join us throughout the week for trading at noon when we look at the big market movers. I'm Axel Threlfall. This is Reuters.